I'm joined now by Sean Callow. He's a senior currency strategist at Westpac Banking. So, Sean, how do you explain it?
It was really quite puzzling. I think the extremes of the stock market meltdown did certainly seem to be in error, as your correspondents have been saying. But before that real panic there at about 20 to 3 local time, you had the Dow was already off more than 300 points, and obviously that's pretty much where it closed. So I'd say that it's a 3+% fall in equities, and it's probably a combination of factors, but there's no doubt in terms of risk aversion, people were disappointed that the ECB effectively did nothing at their meeting. They were hoping for something new from them. And these signs of strains in the funding markets and flight to T-bills is certainly an indication of great stress.
Well, Sean, this is it. A lot of people said that the markets were just horrified that the ECB didn't do anything, didn't indicate its willingness to do anything. Did they miss an opportunity here to really get in front of this crisis?
Well, they did, and we have to admit that the ECB's statement came well before the main wave of selling on Wall Street, but really it's caused a great deal of disappointment for euro. It provided perfect opportunity to keep selling the euro, and I would have thought that at least to raise the possibility of taking some unorthodox steps. It doesn't have to be necessarily to commit yourself to buying government debt. I know that's a big deal for the ECB, even though the Treasury, the US and the Fed and the Bank of England have been doing it for some time. But certainly the markets would have at least liked to have seen something more than assertions that that Portugal and Spain are different from Greece, therefore there's no contagion.
How grave is this situation? I mean, obviously investors are very concerned about contagion. You had PIMCO's El Arian saying that after morphing into a regional dislocation, the Greek crisis is now going global. Is it going global?
I think it is, really, because we've seen such heavy falls in Asian equities in particular. Even just yesterday we saw close to $800 million pulled out of Korean stock market. Now, nothing's changed on the Korean economy. Their outlook is still very, very strong, but a lot of, if you like, late money has come into the Asian market. Particularly April saw massive inflows to Asia, and yet we've seen very heavy losses over the past week or two. So clearly these sorts of jitters are a great concern, particularly for a market that was probably a little bit overweight on the buy Asia and sell the rest of the world story.
Sean Callow there for us. Thank you so much for joining us.